It's Thursday, the 1st of April. My name is Paul Durrans. I'm one of the investment directors here at True Potential. Today, I'll be giving an update on what's been happening in financial markets over the past 24 hours, what the key drivers were, and what I'll be watching out for today. Yesterday saw mixed equity market returns with a reasonable amount of dispersion. The US market was the top performer, with investors encouraged by the new US infrastructure package, which came out last night. The S&P 500 was up 0.4%, while the Nasdaq was noticeably stronger, up 1.5%. US growth stocks outperformed value stocks, which has been a rare occurrence over the past few months. Also, small cap stocks, which have been a popular investment over the last 6 months, were up 1.1%. Elsewhere, Europe was down marginally, just 0.2%. Like in the US, their growth stocks outperformed value stocks, with bond yields coming in slightly lower. Here in the UK, the FTSE 100 was a noticeable detractor, down 0.9%, and the more domestic market, the FTSE 250, was down marginally by 0.3%. Overnight in Asia, China was very strong, up 1.3%, and Japan was also strong, up 0.8%. The details of the US infrastructure package was the key event yesterday, just weeks after Congress approved the $1.9 trillion fiscal stimulus package to boost the US economy. Biden's investment proposal took center stage. Joe Biden unveiled a new $2.3 trillion infrastructure package centered on fixing roads and bridges, expanding internet access, and boosting research and development. The plan is 8 years in duration and will be funded by new corporate taxes, rolling back some of Donald Trump's tax cuts that he implemented when coming to power. The proposal is an increase in the corporate tax rate to 28% from 21%. However, this may be reduced down in order to get enough support and get the bill past Congress. Other noteworthy data from the US yesterday was the latest Adp Employment report, which showed 517,000 people joining the workforce, ahead of the 500,000 estimate and the highest since September. February was also revised up from 59,000 to 176,000, showing that the momentum in the US labour market continues to grow. In the bond markets, the US 10-year Treasury Yield was broadly flat over the last 24 hours, despite rising temporarily after the reveal of the new infrastructure plan. Today, it's currently trading at a yield of 1.73%. As I mentioned earlier, the UK market was noticeably weaker yesterday. This was despite the positive news on the final Q4 GDP figures, which were revised higher to 1.3% over the quarter versus a preliminary reading of 1%. Private consumption dropped more than initially reported. However, this was offset by a big upward revision in business investment, which jumped 5.9% versus the initial reading of 1.3%. Exports too were revised much higher, which is encouraging for the UK, highlighting economic activity has been much stronger than first thought. In terms of what I'll be looking out for today, well, there's some PMI manufacturing data out, both in the US and in Europe. A very good data series. It's a leading economic indicator and widely followed by market practitioners. We also have the weekly US jobless claims numbers, so we'll be hoping for further signs of improvements in the US labour market. Also today we have the OPEC Plus group meeting, who aim to regulate the supply of oil, and we'll be expecting them to extend some supply restrictions into May, given the new wave of COVID infection rates that we're seeing in some countries. That's all for today. We look forward to bringing you up to date on Tuesday. Have a great Easter.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.